Good morning, everybody. This is the Saturday morning Viper trading webinar. If you're here to learn about trading the financial markets using the Viper tools, you're absolutely in the right place. First, we have to get our standard disclaimer out of the way. Let's go ahead and knock that out. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everyone in here does know that you do trade at your own sole discretion. Excellent. Welcome, everybody. This is part two of a two-part sort of training session we're doing here involving swing levels, how to trade swing levels. We had session one of this on Thursday night. It is posted to both YouTube and our website. If you have not seen it, I would strongly urge you to download it. By the way, up on YouTube and our website also is posted Gary's webinar from Wednesday night, which is also a very good one. I think he talked a lot about phantom trades in that one. Please make sure you visit our website or YouTube channel. Download both of those. There was a lot of basics as far as swing levels were concerned in that Thursday night webinar, so I'm not going to cover a lot of the basics today. I'm going to kind of jump right into trading. So without further ado, let's get over to some charts. Let's start with screen one, which has a YM chart on it. Here we can see several things. Okay, there is quite a few new people, some free trials, and I'm going to take just a couple seconds real quick here to talk about what you see as far as just the basics of what you're looking at are concerned on the chart. First of all, we trade futures instruments. They're all listed here, the ones that we watch as far as our watch list, if you will. But in the room, of course, most of you know, we're going to look at each of these today. We trade crude oil. We trade NASDAQ, NQ. Crude is $5 a tick. It's still on the April contract. All of these are going to roll. I'm going to roll these today. Okay, so all these currency futures, 6A, etc., EMD, ES, all the equity futures, NASDAQ, Russell, TF, and YM are all going to roll to the June contract. Everybody knows how to do that, right? We're going to roll them to the June contract. So Monday, we're trading June. Now, on these charts, you see the background colors, you see the bar colors, you see the swing levels, and of course, the most prominent thing is the bands. The mid band is the thick one in the middle, and we have 4 bands above, 4 bands below. There's also what we call the Viper Predictor. It essentially helps you visualize swing levels. I'm taking it off today because we're going to try to see them ourselves. But this tool right here called Show Predictor actually will show them for you. Okay, so this tool that we created, this is an indicator that we put on our charts. Some people, a lot of people like it a lot and use it every day. Some people find it a little busy. And that's why we gave you the ability to toggle it on and off. So if you want to see, where the swings are, you just simply toggle it on. There's all your swings, and to not see it, you just toggle it off. Generally speaking, and I'm talking about in the general sense right now, that when the background is red and the market bars are primarily red, and you can see all the bands, including the mid band, are stair-stepping down. We are in what's called a downtrend, and we are looking to sell or short the market, whatever market you're in. If the converse is true, if the market is background is green and the bars are primarily blue and the bands are all stair-stepping upward, as you see right here, we are buying or getting long in the market. All right, so that's just the basics. When a downtrend, selling, getting short, you're selling the market. Uptrend, you're buying and getting long. Now, in the interest of saving time, I'm just going to quickly just reiterate our entry approach. Most of you know, of course, that we do not buy or sell what's called thrust moves. So as you can see here, all markets do this. It doesn't matter if it's stocks, Forex, it doesn't matter. All financial markets behave in terms of their volatility more or less the same. For instance, here is an example of a thrust move. A thrust move is the push, if you will, in what can start off to be or continue to be the trend direction. Now, you've heard me say scores and scores of times that absolutely we do not buy or sell the thrust moves. We are retracement traders. So if you're brand new and you're just seeing this for the first time, we buy and sell. Our entry points are in retracement pullbacks, if you will. So for instance, here you see we go up to a little swing here. And by the way, we could have known that swing ahead of time because we saw one over here. Now, the more you watch and see financial markets, you're going to see that swing levels tend to be checked over and over and over again. They'll come up to a swing, they'll pull back from a swing. They'll pull back into a swing, they'll thrust up through a swing. So for instance here, our entry on this trade, on this pullback, would have been right in here because it is the retracement. Right here. We have all manner of tools built to help you with your entry. We have lines and rays and sniper lines and boxes and all sorts of things on our object trader tool, in our Viper tool chest, if you will, that help you enter these trades. So in today's webinar, I'm not going to focus too much on the actual entry itself. However, there is a good question from Bill that I'm going to address very quickly because it's a very important one. So Bill, when you hear the term boxing it in, you're going to hear this a lot in the live room. What does the term boxing it in mean? So that might be completely foreign to some of you. Very quickly, what it is let me blow this up so we can make this very, very clear. And this is actually quite an ideal one. In the case of this thrust move and the retracement into support, just right at the mid-band here, can you see that several of these bars are consolidating in a very small, tight range, forming what's called a little region box? So on our object trader tool that you would see in the panel to the right, and most or all of you have seen the object trader tool, there is a drop-down selection called region box. So you would simply select region box, and then you can toggle on long or short, and that would correspond to in the room saying long bias, short bias. In the case of an uptrend, you would have what's called a long bias only, meaning that you're only going to allow your region box when it's activated. You hit the hotkey, you activate it. It turns a different shade of color, which means that it's active. And when you toggle off shorts and you toggle on longs, it will only allow the box to take long trades. So it's looking for a close above or the box, which would more or less probably be, depending on how you actually drew it, that you would be long on that bar right there. Now, the reason that we say long only is because if you are in an uptrend, you are only looking to buy. You do not want shorts. The secondary reason for that, as most of you know, it's quite possible that as this box is forming in real time, right at the mid-band here, you could get a bar close, hypothetically, just below the bottom of the box. And we'll look for cases like this morning. We'll look on different charts and we'll find cases where this happens. And you would not want to be short because many times what will happen, it'll just bip down below that box just like a tick or two and then boom, right back up. So in actuality, you do not want to allow that to go ahead and get you filled short. You're only looking for breaks up. All right, question. I'm a pop quiz, make sure everybody's awake here this morning. Where is another region box? I'm going to do a whole manner of questions today. I'm going to throw all sorts of pop quizzes at you, and each one's only going to be 10 seconds to answer. I want everybody to make sure that this is everything we cover here just sort of gets ingrained in the back of your brain, your trading mind, your subconscious, so that instantly when you see it, you know what to do. Because by the way, for those of you that are totally brand new to visiting us, when we have a live room, there's many misconceptions about what the live room is. What is its purpose? And the prevailing thought that I hear out there a lot is, well, you know, you should be telling us where to trade. You should be telling us where to get in. you should be calling out everything, and we should more or less kind of spoon feeding you all the trades. Is that the purpose of the room? No, 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 no. I'm going to dispel that myth right now for everybody. Okay, that is not the purpose of the live room. The purpose of the live room is to have some camaraderie, to see swing levels, potential entries. However, with all this training that we do, we want everybody in here, including everybody that's going to be listening to this, to be empowered to see trades yourself ahead of time. So that when you hear a call or an observation in the room, if it comes to this swing, blah, 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 I'm going to buy long. If it hits that swing, blah, 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 I'm going to get short. That you should have already seen that yourself. You're empowered to do that on your own charts, right? Okay, so the question here is, where is another long trade setup? You can either type in a time or a level, and we'll have 10 seconds. Where on this chart is another, and there is one. I'm not making it up. There is another trade entry here. Where is it located? Either in terms of time. This is Pacific time down here at the bottom. This is all pre-market. Okay, this is a European session. Or a level. You can type in a level. That the numbers of the levels are over here. 17.050, 060, 070. There is another trade setup here. Where is it located? Either time-wise or level-wise. 10 seconds on the clock. Where's the other trade setup here? And it's very similar to the one I just showed right here. The setup looks very similar to this. It's not exactly the same, but it's very close. 8 seconds left. Where's the other trade here? Time-wise or level-wise? Where would you get in to this market if you were watching this chart at this particular time of the morning? 5 seconds left. Time's almost up. By the way, the more you participate in these, the better you're going to do in your trading. We like these webinars to be very interactive, where you take part. You know what they say, your brain's like a muscle. The more you exercise your brain and force it to think about something and do something, it's going to make a world of difference in your trading. Or you can just stare at your charts and watch the money flow by you. It's your choice. Absolutely, totally your choice. All right, time's almost up. 3 seconds. Where's the other trade on here? Anybody see it? I see some great answers coming in here. Excellent. Ken, Walter, Richard C., Adam. Excellent. Ralph, all those numbers look really good. Time's almost up. Ray Minaj squeaking in here. Terry. Okay, Daryl, good to see you. Hey, Daryl. Billy Ray, perfect. Okay, good. Excellent. Time's up. Okay, so following through with our thinking, and this is something that we want everybody to see on your own charts, on your own desktop. Here we can see we had another thrust in the market from the long trade set up here. We got long out of the region box from the midband, felt a little bit of heat on the pullback. We thrust up, we hit the 075, we pull back, we hold it, we push to a fresh high by 5 ticks. This is the thrusting part of the move, yes? Trend is up, we're looking to buy. Market pulls back again, very close, and sits right on the midband right here with these yellow bars, just like that. Now you're going to notice that in real time, all of these price patterns are not going to be exactly the same. That's the way the market volatility works. It's not all going to be the same. Most of you, almost all of you said somewhere between 430 and 445 in this area right here was the trade setup time-wise, so you were correct. And if you said anywhere more or less between 055 and 060, 065 in this area here in terms of both time and swing level, you were correct. Here again, you can employ the use of the region box tool, bias to the long side only. You could use your line tool or your ray tool. You could put the sniper line under the midband. No matter how you did it, you were long on one of these bars right here. Filled long on one of these bars right here. Of course, if you're using the Object Trader tool, it's the semi-automated tool that automatically places all your stops and targets once you engage the region box or the lines and you're filled. It will put all that. You've seen it. Gary's shown it a million times in both webinars and in the live room. I think almost everybody's seen the Object Trader tool in use. It will fill you. It will put your fill in here. You'll see it right on the chart. Even though it's a semi-automated strategy, you can see all your targets. It'll place all your targets up here if you have multiple contracts on, and of course it will put your initial stops down here. Default is, I believe, 10 or 12 ticks. So you're filled here long. Your targets are up here. Now, it's interesting to note, I'm going to point out here, and I'm going to show this a few times, and then we're going to try to look for it together as a team. Notice that after you hit this swing here twice, where did it pull back to on that next retracement? So here's our thrust, and here's our pullback. So what you can actually do, and I know most of you actually do this already, is as the market is moving, either up or down, you simply put lines where the swing levels are, shown. And so that when the market pulls back to or thrusts up through certain areas, you can see where the swings are. Ken asking about 423. You know, Ken, I see what you're saying. Ken is asking about the opinion of consolidation that occurred right in here. Would this in fact be a box as well? It could be. It could have been one, and the case to be made for that would be the fact that you did have somewhat of a swing established right in here. And it came very close to it. Yeah, so if you did see that as a region box trade, that you could make the case for that, yes. Although that is a fairly shallow, narrow pullback here, of course you did get a nice pop, and that was a good trade. Depending on how you manage that trade, you could have gotten out of that trade and gotten into it again here, or it could be one continuous trade if your stop level was down here when it pulled back and hit the mid-band again. And Gary, by the way, most of you know this, and I do sometimes. These are when it pops up and you get a favorable, you might have actually hit a scalper target here if you trade multiples. When we say the term scalper target, you're going to hear that in the live room too. You're going to hear that a lot. What does scalper target mean? Okay, scalper target is where a market fills your entry, so you're in it long or short, and then it goes up to a nearby swing level. So for instance, and it's generally within 10 ticks. So when we say scalper target, it's when a market pops out, gets you into the trade, and then gives you, anywhere from 5 to 10 ticks. So for instance, this pop up here on this little pop from the long trade out of that box that Ken asked about here would actually be a scalper target because it hit right at where that swing was, and it broke it by a handful of ticks. Everybody see what we're talking about here? Trend is up, background is green, bars are blue, stair-stepping up. We're looking for places to buy, and since we are retracement traders, we buy pullbacks. Pullbacks into support are what we're looking for. We never ever buy the thrusts. We want to get, if you have a tendency to do that, to get convinced when a market's going up, you got to really fight that. Sit on your hands, force yourself to be patient, wait for the market to pull back to you. Okay, good. Well, let's go ahead and move on. I think everybody gets the picture on that. Now, what I want to show, I'm going to go over and show the opening on Friday for YM here, and then we'll go over to a different chart. Okay. Let's look at the open, and let's see what's happening at the opening of the market on Friday morning for this particular instrument, and actually sort of mirrors what all the equities were doing at this time. Now, I'm going to do this exercise with you and pretend that we're looking at it in real time. Okay, we're going to pretend that we're looking at it in real time. All right? And we're going to go right into the open. I'm going to first show the pre-market. Pre-market is just shortly before. In fact, let me just go ahead and pull the screen up. Here we go. Ready? I haven't shifted to June yet, Daryl. I actually traded March on Friday. There is a brief period where you transition between the current market and the crossover market. Most of you, I see quite a bit. There's still a bunch of some new people coming in here. I'm just going to pause 1 second and show this website here, okay? This is the de facto site for the futures trading. It's called CME Group, right here. I would strongly urge everybody in here and everybody listening that to bookmark this webpage, cmegroup1word.com. This is more or less not all, but a huge chunk of all the futures trading instruments right here. You can see, of course, you got all the ag products, the energy complex, interest rates, etc. The equity markets are right here. Now, if you mouse over the product here, which is the instrument that we trade, you can see here it says the S&P futures June 2016. You will always have on this front page of this website the current front month of each instrument. Here's crude oil, mousing over crude oil. You can see what it is. It's April, right? And just very quickly, what you do when you set up your Ninja Trader to trade instruments using our charts and our tools, you simply come in here into Tools, Instrument Manager. Just take 2 seconds to show this real quick, okay? You come over the instrument you're looking at, 6A's the Aussie futures, the Aussie dollar futures, okay? Or let's go down here. Let's say that you are a Russell trader, which is TF. Come down here to TF right here. See how it says June? And the June front month expiry corresponds to the same one on over here. YM, NASDAQ, they're all June. So you got to, this weekend, if you've not already done so, please take all of your equity instruments and everything you trade and update to the current front month, which most of them, of course, is going to be June. Okay, everybody see that? That's how you do that. Go ahead and bookmark your CME Group. It's a good site. All right, back to the chart. Now, 10-second pop quiz here. Right-hand side of the chart, pre-market. This is 2 minutes before we go into the open. Where are the established swings on this chart? So we need 2 levels. We need an upper level, and we need a lower number. So it's going to be 2 numbers. I'll actually give you 15 seconds. You're going to type in 2 numbers. Where is support on this chart, and where is resistance? Very quickly. 15 seconds. We're pretending that you're trading this market on Friday morning. We're going to advance it slowly and pretending we're in real time together as a team. Let me open this up. 12 seconds left. Where are the swings? Where's the upper swing and where's the lower one? If you had this chart sitting in front of you, where would you put 2 lines? That's all it takes. 2 lines, 2 levels. 11 seconds left. We have an upper line for what we call resistance, of course, and we have a lower line, which is what we call support. 2 levels. Where would they be located on this chart? I see some good numbers coming in here from the team. Ken, Bill, Richard C., excellent. John, Ralph, Peter, Kenneth, that's some good numbers. Adam, I like those. Sedley, 6 seconds left to put your feedback in. Where is resistance and where is support? Our eyes are focused right over here on the rightmost part of the chart. We're in the pre-market session of Friday morning, getting ready to trade YM. Billy Ray, Peter, Jim B in the house. Good numbers. Rob, I like that. Terry, perfect. Time's almost up. 3 seconds. Where is support and resistance on this chart? Good. Wow, those all look really good. All those answers look very, very good. All right, time's up. Okay, so here's how we do this. Very quickly, if you're not really accustomed to finding support and resistance levels and you're not going to use predictor, which shows them, right? We take our eyes and we look from the right-hand side of the chart when we look backward like this, and we look for what we call a preponderance of candles collecting and going to a certain given area and then reversing. And then we put a line there. So for instance, at the top level, if you said anywhere in here, can you see that before this was a support and then it bounced up and then it broke it and then it came right back to it? So we just look for these swings. That's what the term swings means. Swing is where a market comes to, and then it generally forms a peak or double tops or triple tops, and then it reverses. That's called a swing level, which more or less most times corresponds with what we call support and resistance. Okay? Looking back from the right-hand side of the chart to the left, we can see that earlier in the morning, a little swing level formed right in here, and that after we hit this swing level, the market pulled back, of course, and came very close to checking it right in here at 6:26 in the morning. So we're about 4 minutes before the market opened. I'm here in California. This is all Pacific time. Equity markets at 6:30 Pacific. So this is 2 minutes before the open. You could have taken your YM chart and simply taken two lines and gone like that. Now I'm going to ask a second follow-up question in regards to these two swing levels. And this is really, really important for everybody in here today that's trading this, any markets like this. As long as the market remains within the confines of these two lines, is the market trending or consolidating? You can type in T for trending or C, consolidating. I'm only going to give you 10 seconds on that one. That should be an obvious question for everybody in here. T for trending, C for consolidating. 6 seconds. T or C. That's all you got to type in. Trending or consolidating. 4 seconds. T or C. Time's almost up. Just type in a letter. Just slam your hand down on that keyboard and get a letter in there. Time's almost up. All right, I see a lot of good answers here. Adam, Sedley, Ralph, bunch of C's across. Okay, time's up. Kenneth, you just squeaked in. We are consolidating. So when we talk about trade entries, and I'll ask another sort of semi-obvious question, is if a market, so markets go between periods where they consolidate, which is, you're going to hear other terms like it's range bound. That market is range bound. It's trading within a range. These are all terms to mean that a market is more or less going sideways. It is not going up. It is not, so it's not the tendencies of something that's going sideways. In fact, let's go ahead and advance it and show it. And what I want to say before we do this exercise together, the manner in which you trade consolidation is very, very different than how you trade trends. Trends, you're looking for retracements and consolidation areas at or around mid-bands, yes? And then we're looking for trend continuation, which implies thrust in the trend direction. And retracement, thrust, retracement, that is what a trend is. Fresh highs, fresh lows, fresh highs, fresh lows, etc. In a consolidation or range-bound situation, you do not have this condition where you're buying retracements at support like that. In a trend, you're inside of a range. And you have to either decide whether you're going to buy support and sell resistance or sell resistance and buy support. All right, so what we're saying, just to be explicitly clear about this, if you're going to remain within a trading range, you have to decide if you're going to trade that range or not. And if you are, we're going to discuss how to trade it. Here comes 6:30. Let's advance the chart together. Hold on, stand by. Comes down below, right at 6:30. We have a new swing level established right here, right at 6:30, a fresh one down below here. So we have two different ranges, areas. We have a lower area just right at or below the mid-band swing, and we have an upper one here. Comes back up, can't quite get back to the top here. Upper range, just a few ticks shy of it, bouncing off 41. Back down, checking the lower swing. So as of this point, you're 10 minutes into the trading day. Is the market still range bound, or is it trending now? 10 minutes into the session. Here, I'll advance a little bit more. Okay, now we're 15 minutes into the trading session. Are we still range bound or are we trending now? What say you, team? What do you think? I'm here. Okay, here we go. Here's 13 minutes in. What do you think? Range bound or trending right now? They're 18 minutes into the trading session. We're almost at 7 o'clock. You're in a range. And now how do you know that? And this is really, really important. Come Monday morning or Sunday night or whatever session you decide to trade, and you're looking at some charts, or even say this weekend, you have a spare hour or two, and you pull up a couple of charts, and you want to just sort of study them so you can get some of the price patterns sort of ingrained into your psyche there. Challenge yourself, because here's what we hear all the time. A lot of traders say to us, you know, yeah, sure, you armchair quarterback, Charles, you're sitting there all nice and cozy Saturday morning in your nice thing, and you can just come and say, oh yeah, it was range bound. How do you know that in real time? How do you know that when it's happening? Bars are flying everywhere. It's so fast you can never tell. Well, the fact of the matter is, in the pre-market, did we not draw these lines ahead of time? Before the market even opened. Right? So this is what I want to challenge everybody to do. I know a lot of you, and I can't see you physically, but I can tell some of you are just nodding your head like, oh yeah, okay, draw the lines, whatever. I'm telling you, if you didn't have these lines on here, wouldn't it be a lot harder to see what was happening with these swing levels? If you didn't have all these lines right here to know? Yeah, I'm telling you, it'd be a lot tougher. Take, if you can, a couple seconds out of your morning and put a couple of lines on your chart. It's going to take your trading to a whole other level. It's really seriously going to help you a lot. Just a couple of lines like that, 2-3 lines, that's all you need. And what that'll do is it'll show you the established swings, and then you can start to decide, hey, how am I going to trade this? Or I think perhaps the more important question is, are you going to trade it at all? If you're a range-bound trader, you have to decide, are you going to trade this? Are you going to take shorts? Are you going to buy support? Are you going to take profit up here? Now, I want to say a word about consolidation. And I'm going to use this consolidation area as an example. When the market has swing levels that are, and our general rule of thumb is 20 to 25, 30 ticks minimum. So when a market is swinging in between levels like this, where you can see it's very large, pronounced swings that are 20, 30, 40 ticks in size, there is sufficient room inside of this swing area for you to make money by fading the top, fading the bottom, and capturing the middle, even though you have some slippage and you have commission. So this is what I would say would be a tradable range. Ranges that look like this. Let me show you what I would say to you is not a tradable range. When a market does something like this, can you see this area right in here? Got support here just above 30, and you got resistance up here at maybe, 50, maybe not even 50, depending on how you draw it. I mean, this could be 12, 15, maybe not even 20, not including the little spikes that occur above and below it. In my opinion, I would submit to you that this range right here in this period from about 640 all the way until almost 650 is just not tradable. That is just not tradable. There is not sufficient movement. Can everybody see the difference between an area that looks like this? I'm circling with my cursor, or an area to the left that looks more like this. So when we say consolidation and we say the term range bound and we say things of this nature, there's really, I would say, two different kinds of ways to look at it. One would be, yes, it's range bound and that range is tradable because there are sufficient swing levels and there's enough room to get the meat of a trade in. If, on the other hand, the market is in a tight patch, 20 ticks or less, that looks more or less like this, you're going to want to stay out of this, okay? And the reason that is by the time you buy in here and you get out here and you get slippage and commission, there's just no money in here. There's no meat. There's nothing to grasp onto to make any money in that little chop right there. This happens all the time. If you see this on your chart, let me just be clear. Try to avoid it. Don't even get in the middle of that. Because what's eventually going to happen is a market's going to come out of that and it's going to break up or it's going to break down. It's going to take some big, huge swings, and you're going to get a chance to make some money. So you want to, you've probably heard this term before. You want to, what do you want to do? Keep your powder dry. Keep your powder dry. Ready for a good trade. All right, enough about YM. What do we want to see next? I don't want to run out of time, spend my whole morning on YM. Please take a second and type in an instrument you would like to see. NQ NASDAQ, Crude Oil CL, Russell TF. Take a quick vote from the team, and whatever that vote is, I will drag that chart down. YM, you're off to another screen. Thank you for your assistance today. Wow, overwhelmingly crude oil. Okay. I've got quite a few Russells in there, a couple little NASDAQs sprinkled in. Crude it is. And then we'll do, we'll squeak in NASDAQ and the Russell before we run out of time. Okay. Stand by. Loading crude. Okay, we're going to do a little exercise here. And I'm going to ask some questions, 10-second questions on crude oil related to what we just talked about. And we're going to do, and these are going to be yes or no questions. Here's the crude chart right here. Yes or no questions. And it's going to be in regards to the tradability of certain areas. Looking at crude at 6:30 Pacific, I believe this was Friday. I don't know. I just pulled up the chart here. Is this area on crude tradable, yes or no? Just a Y or an N. 10 seconds on the clock. I'll have to type a letter in. Yes or no? Five seconds. Just a Y or an N. Is this tradable on crude oil, yes or no? All right, time's up. Now, a few of you, the prevailing answer from everybody, hey Skip, Peter, Richard, everybody, no. Prevailing answer is no, simply because these bars are shotgunning. Within like a couple of minutes, all these bars shotgun. It would be very, very difficult to trade this. If you were trading it, you could have been getting short off of the mid-band here. So you might, before, as you kind of got into the chop, this is 6:30 Pacific, so the equity markets are opening. You could have shorted a little bip up here to the mid-band, in all fairness. And you could have taken profits down here. But trying to get in the middle of this, yeah, that would be a big negatory there, right? But the little bip up here at 6:30, right after 6:30, where it kind of came up and hit the mid-band, that could have been a trade entry in and of itself, yes. But in the middle of this, no. It's shotgunning. Well, how do you know when it's happening? Well, you can just see it as it unfolds, CW. Right? I mean, when it starts doing this, 6:30, and oh, gosh darn, silly thing, you're going to open the thing up. Hold on. I mean, you can see it. As it starts to happen, you can see it. I mean, you got your little bip up. You could have sold that swing at 37.69 at the mid-band, so you could have been short. But then as you watch the next 2-3 minutes, you can see it's just right. It's just shotgunning right inside that little box there. That's how you know. That's how you know. I mean, contrast that with swings that you see over here, where bars are moving up and down and hitting swings and coming down and breaking up and consolidating. Okay, that's how you know in real time. We could have taken, yeah, Gary, quite possibly Gary took this trade, or Gary was short at 6 o'clock. Gary was probably short from some other area up here. He probably got, he trades crude every day. He's an expert at trading crude, no question about it. And he might have got in there on that retrace to the mid-band. All right, let me show another area here and ask a similar question. Stand by. Okay, ready? me expand the chart a little bit here. So crude oil pit open is at 6 o'clock, so that would have been right about here. Now, this area right here, is this area tradable? Yes or no? 10 seconds on the clock. What do you think? Y or N? 9 seconds left. Here's the one you just looked at. The one you just looked at was this right here. That was the negatory. And when I say negatory, I mean in regards to getting in the middle of this choppy little bar activity right here in this little 5-minute span. How about this one up here? Is this area tradable? Yes or no? Y or N? Now, I'm not saying are you personally going to trade it. That's not the question, because that's a whole separate matter. Whether you personally as a trader would actually trade that. And we'll talk about that when we're done with the question. The question is it tradable? Yes or no? And I should qualify that by saying, is it tradable, yes or no, to a trader who would trade ranges? Is probably the better way to put it. To a range trader who trades ranges, is that tradable? Time's almost up, 4 seconds. Just a yes or a no. Is it tradable, yes or no? By our definition and criteria that we use to assess ranges. Time's almost up. Most of you, I see the answers coming in. They look very good. Scalping from Skip, okay. Couple more seconds. Dave H coming in. All right, almost. Prevailing answer is yes. Yes. Yes, this range is large enough to trade. Now, what makes it particularly challenging on crude oil is two things. First of all, you're just minutes before the market opens, and generally speaking, at 6 o'clock, and 6:30 and on into the day, you get good moves on crude. So when you're in a pre-market session like this, liquidity is usually thin. You normally have a little bit larger spreads, like a couple of ticks. You might not get filled as nicely as you'd like. You could make the case that inside of this range, which the size qualifies to trade, yes, the tops are a little spiky, so it'd be hard to get out. And if you're shorting that, where do you cover? You know, do you really cover down in here, or do you cover at the mid-band? So it's a pretty choppy, from a technical perspective, the range is large enough to trade, yes. As a practical matter, getting in and out of it, it would be a challenge. Yeah, it would be a challenge to actually trade it. All right, good, perfect. Everybody got that right. Okay, let's move on with crude. Let's look at some other setups, and I'll see if you how many of you are on your game here this morning. Oh, let me take the predictor off. Predictor's going to give it away. Okay, I've got another area to look at. Ready? Ah! I just hit a button and it moved it. All right, let's do another kind of quiz. Let's do another kind of quiz. Let's do another quiz. This is going to be a good one. I like this exercise. Let's do an exercise together. All right, let me do a series of exercises here, and hopefully this is going to really help you visualize things. No, I'm paused right now, Jim B. Give me 1 second. I'm pulling the chart up right now. Okay, this is going to be trade setups. We're going to look at trade setups together and collectively make trade calls. And the first one's going to be easy, and then I'm going to make them a lot tougher. 10 seconds on the clock. This is super duper easy. Is this a long trade or a short trade? Right in here. These bars, these yellow bars, B for buy, sell for short. Are you selling this or are you buying it? 9 seconds left. These bars right here, these yellow bars on the right-hand side, B for buy, are you buying it? S for selling it. 7 seconds. Everybody should get this one. One of the most basic trade setups we have. You getting long? Are you buying here? Or S, you're selling and shorting it. 5 seconds. Time's almost up. Got to type in an answer. What are you going to do? 2 seconds. What are you doing? You're buying or you're selling it? You pull up a crude chart, 9 o'clock Pacific on Monday morning, and it looks like this. What are you going to do? Either way, okay, Minaj. All right, time's up. It's a B for buy. Yes, B for buy. If you say B for buy, here again, in keeping with our notion of trading with the trend, we push up. We have a thrust move to a swing, which just almost hits the swing over here, right? Here's a swing level, comes almost to it. We are retracement traders. It retraces just shy of the midband, forms a nice little consolidation region box, bias to the upside, yes? We're only taking longs. That's right, we're boxing it in, Richard C., right above the midband, longs only. Of course, we see the market consolidates a little bit more, it pops up, and we get a nice long trade right there. Good. Now, in keeping with our notion of swings, we could at this point, 9:30 Pacific on Friday, have taken a line, and where would we draw the swings on this chart? We need an upper swing and a lower swing. And this is going to be part of a two-part question. Second part of the question is this. If and when the market was to pull back crude oil off of this thrusting move from our long trade right here, where might it pull back to? Now, we're not crystal ball people, and we're not trying to predict the future, but we can set things up on our charts to prepare us to succeed. Where might it pull back to? If this market retraces off of this swing at 85, where might it pull back to? And I'm going to state the obvious. The trend is up, background's green, bars are blue, we're stair-stepping, so we are buying. So on a pullback, we would buy. And if your chart looked like this, where would you be prepared to buy a retracement on crude on this chart? Good. Richard C., I like your answers. Got some good answers coming in here. Bill, Peter, and Ralph, I like those. Sedley, good swings. I like it. Buying. You're calling out some areas. I like that. Kenneth, looks real good. Perfect, Thomas. I like that. Carl G., excellent answers. Couple more seconds. If the market retraces, where would you look to get in to buy this market on a retrace? Just take a look at it. Where's the swings? Where's support and resistance? Give you a little clue. Where's the midband? Just look at it. Pretend you're watching a chart right now and this is happening up in front of you and you want to trade crude. You want to make money trading crude. Where are you going to get in? Time's almost up. All right. Oh, you just made it, Dave. Just squeaked it in there. Time's up. All right, now let's just very quickly talk through this together. Okay, we're going to talk through this together, and here's how we're going to approach our trades when we trade crude, or any instrument for that matter, yes? And it's really not rocket science. I mean, I think what I find, and I know Gary does too sometimes when we talk to traders, is you know, it seems like that there's just some sort of mystery and magic, and in real time, a lot of traders, I think, just glaze over sometimes. Like, what am I going to do? This is just so fast. I don't understand it. Well, what you can do is you try to frame in a market so that your mind can understand what's happening, so then you can take action. Does that make sense, everybody? All you're doing with these lines and these tools is you're kind of framing the market in so that your mind can grasp what's happening, and then you can take action and make decisions, trading decisions based on that. That's really all this is. So you don't have to get nervous about markets moving around. You really don't. Okay? Now let me blow this up. So here's how we look at this. We have a couple of swing levels we can watch on here, and some of you type them in. Obviously, there's a pretty good swing level that was down here where we took our long trade. From the bottom of this prior trading range that came up, we consolidated, we broke up. This is where we went into the uptrend, yes? We have a fresh thrust up here. We can see that we have a swing here. We can see we have a swings over here, and so we can take another line and draw it right here. Now, when we think about retracements, and you've heard me say this extensively in other webinars, I've dedicated almost entire webinars to this issue. when we think about retracement areas, it's healthy to think of it as an area. The market can come down in a shallow manner, meaning that it only comes down to the top of a prior support area in here. So that would be anywhere around 69.70, right? Right in here. It can come a little deeper. We call this mid-range. It can come down into here. Mid-band's right around 61, 65. And markets can come a little bit deeper, just below the mid-band, around 55, 56, 57, right in here. So our area of opportunity to buy on a retracement, okay, let me rephrase that. I think I had it paused. I've drawn an area box right here. Put a line right here at the top of where that swing is. That's resistance. We have another support level down here at this line right here. So we have two lines and a little area box. So this is how we're framing in. Everybody see this? Support, resistance, thrust, area box. You don't have to draw the area box when you are visualizing the trade. You can draw it if you want to. If this helps you visualize the trade setup, absolutely. So this is how we're framing in what's going on so our minds and our conscious can take action. That's all we're doing here. So shallow retracement, it comes down into a swing at the upper level here. Shallow retracement. Bounces, we're prepared to take a long, yes? Mid-range retracement, it comes down into around the mid-band, 60, 61. Bounces, long. Deep, a little bit deeper retracement, come as low as 55, 56, 57. Bottom of our little opportunity range. For those of you that like baseball or softball, anything involving a ball where you have an area like you have to throw a strike zone, think of it like a strike zone. Instead of the ball coming in for a pitch, you're looking for the market to come into our strike zone, yes? So we can take our bat and hit the ball. All right, so let's play this out together. Here we go. Market's pulling back. Oops. Hold on. Chart stuck. Comes down a little bit. Comes down a little deeper. Okay, how about right now? Where was our opportunity box? Let me blow it up. Let me pull this line up a little bit so you don't get confused about it. What's going on with these bars right here? These three bars right here, what is happening with those bars? Where are they located? Let me put it another way, continuing with the baseball analogy. Is that in the strike zone or not? Are those bars in the strike zone, yes or no? Anybody? You drew the box. You did all this analysis. Maybe you caught this long trade, maybe you didn't. Okay, that's almost irrelevant at this point because now we're over here. It's 9:34, and you got to decide what you're going to do. You put the lines in. You did your analysis. You thought this through, and here are the bars. What are you going to do? Box it in. Price to the long side. Good. I mean, in terms of pitches, that's right in the strike zone. Yes. I don't think unless it just came and just sat right on the mid-band with one bar, three bars right there in a tight little 6 or 4 tick box, which you get sometimes, by the way. Those are ideal boxes. I love those. That's my favorite trade, by the way. When those bars come and they sit and they form like a tight little 6 ticks range right on the mid-band like that, that is handing you money. I mean, I don't know what words to say, especially if it's in a trend, a big long trend, and you get those retracements. That is like, here are hundreds of dollars. Open your hands and take it. Seriously. Anyway, okay. All right, so we're in the strike zone here. Okay, the ball's coming at us. We take a swing, and what happens? We get filled long. Let me move this line. It's kind of cumbersome things up and making it tough to see. Okay, you're filled long here. Your initial stop is 12 ticks down below there, so it'd be somewhere down in here would be your initial stop. Object Trader would put it in for you automatically. You don't have to worry about that. Pops up, you actually get a little bit of a scalper target here, right? Scalping would be up when it pops up here and you get a couple of 5 ticks. Next target would be 86 and above if it can take it out. We're in an uptrend. We're long. We're looking for a home run. That's right, Dave. Pops up, consolidates around 70, comes back, check support one more time. By the way, those of you who had not taken a swing at the ball, so to speak, continuing the baseball analogy, you got another swing at the ball right here, don't you? That doesn't happen all the time. It does sometimes. So essentially you had this. You had the thrust, which got in the trader who boxed it here. You got a retracement right back into the sweet spot of the trading zone here, and you got another shot to get in here. Everybody see that? Two shots, two swings at the ball there. Pops up. You get your scalper target at 86, takes it out, and you get a nice little trade. All right, and most of you got that. Everybody see that? When markets are trending, up or down, markets are trending up or down, we look for retracements. And as I said before, think of them as an area, a little strike zone. There's going to be shallow retracements, mid-band retracements, and a little bit deeper retracements. We trade the retracements in the trend. Uptrend buying support, downtrend selling resistance. Any final questions on that? We're almost out of time, but I promised a couple other charts, so I'm going to pull the Russell down before we wrap. 848, there's a congestion zone, could have been 2% short, but it broke long. At what, 84, 848. Oh, he's saying right in here. Well, you know, at the time, he's asking about this box right here. At the time, would you have traded it with a downward bias only? Yes. Yes. Here, you see my cursor? Let's go back and pretend it's 8:48 in the morning on Friday. Okay, let's see how you would have looked at it, interpreted it at the time it actually happened. I shouldn't be paused. Can you see my cursor? Everybody see the chart moving around? Chart moving, cursor moving. Everybody see? You should. It's not on pause. You should see this. Cursor moving, chart moving. Everybody see this? Yes. If you don't see the cursor moving, let me know because it should be moving. Yes. Okay. Good. Yeah. So that's a good question. That's a good question. Daryl is saying. Here was your downtrend. Okay, the background is red. You're coming after this long, protracted down move. You had thrust, retracement, mid-band, short, short, short. We get short. We're making money on the short. Here's the thrust, the final thrust into 830 right here. It's a nice thrust on the short side. Comes all the way back to the mid-band. Background is red. Trend is down. We're looking for shorts. So you box that in with a short bias. Right, like that, right at the mid-band, boxed in, short bias only. You're looking for it to break down, continue the downtrend. That would be our thinking at this time of the morning. And quite the opposite happens. It pops up and then reverses trend. So in this particular case, depending on how you drew it, you would not be filled short. You would remove this box. And then now with the thrusting up and the retracing, you're looking for retracement trades, which are the trades that we got here. Got the box there, came right back to the swing, right at the mid-band, where this prior consolidation patch occurred. And of course, you know the trades we got. We got that trade, and then we got another trade. Worked out very nicely. A couple of nice long trades there. Okay, good. All right, let's get Russell down here before we run out of time. I don't know that we'll get NASDAQ in here, but we can definitely squeak the Russell in. We'll do a little extended hours kind of thing here. Let's get a couple of trades in on the Roosty Bird. By the way, that everybody knows when you hear in the room, if you hear something to the term of roosty bird, gnarly little roosty, we're talking about the Russell. Okay, that's our joke names. We have Nazi, NASDAQ is Nazi. You get the idea. We'll do a couple little trade calls and then we'll wrap. Here's the Russell right here. This is late in the morning, afternoon. The market's coming up. And is this tradable, yes or no, right here? Would you trade this whole area right here? Just a wire and in. 5 seconds. No time at all. By now, we all should be experts in quickly seeing on charts. I want everybody to be a perfectionist at this come trading time next week. You instantly look at a chart and you instantly know what to do. Can I trade this? Yes or no? Can I trade it? Yes or no? All the time in the back of your mind, you're asking yourself that question. And the answer is yes, you prepare to trade, yes? If the answer is no, then you stand down. I wouldn't even do it in sim. Because here's the thing, and I said this on Friday, I don't know if some of you caught this, okay? If you really want to become a full-time trader using real capital and making real money every day, and you're trading in sim now, so you're still learning a little bit, it's okay. You have to try to treat sim as if it was your real money. If you can learn to do that, when you transition to real money, it won't be so tough to transition because you will have treated that like your money. If you go in and you treat sim trading like willy-nilly, like, oh, well, I know this isn't real. I'm going to pull the trigger here, but I know if in your subconscious, you're saying to yourself, okay, that turned into a loss. Or here's what other traders do. I know you do this. There's some of you do it. You'll get into a trade, it'll turn into a loser, and then you'll let it keep running against you because you know it's sim and you don't get out. You just you leave the trade on to see what it's going to do. How many of you do that? It's okay. It's okay if you do that in sim. I'm not saying anything bad about it. I know some of you do it, right? You put on a trade, whatever, you buy an area, and the next thing you know, it runs against you. Maybe you bought here and you got long, got a little bit, you didn't put your stop in, it runs all the way against you, and you just let it run because, well, it's sim. I just want to see what it's going to do. I know the logic behind it. I understand. Guilty is charged. Okay, I'm not going to say your names. You used to do it. Okay, you don't do that anymore. All right. Okay. All I'm suggesting here, I'm not calling anybody out or making anything negative about it. I understand why you do it because you know it's sim money. It's not real money. If you can treat that like real money, take real trades, put real targets in, put real stops in, feel the pain if it starts running against you, and then get out. Treat your sim account like it's real. Then when you get ready to trade real money, it's going to be real and you're going to know the feeling. Okay, let's come back. Let's look at some more trades here. Keeping with our theme here, one more call, and then we'll wrap. Is this area on the Russell tradable, yes or no? This would have been right at the open. I don't think it was Thursday. I think it was Friday. This is the first half an hour. Actually, this almost extends kind of almost into the pre-market session here. Tradable, yes or no? Y or N? 7 seconds. What's our criteria? Ahead of the market, right at the open, we had our swing levels. We established our swings. We knew that resistance was up here. We knew support was down here. We said to ourselves, self, if it stays within the confines of those two lines, I realize that we are in a range. I realize that ahead of time. Am I going to trade it? Yes or no to myself. You will physically ask yourself that question. You don't have to sit down and have a chat with yourself, but as you're looking at a chart and you put the two lines on and you see it bouncing around, you're going to say to yourself, wow, that's in a range. Do I want to trade this? Tradable, yes. Good. Now, is your primary mode of entry on this chart and this is a two-part question, and I'll give you a little extra time for it. Are you selling resistance and covering at the bottom of this range as your primary mode of entry? Are you buying support and taking profits? So this would be buy, B for buy, bottom, S for sell, top. So are you shorting this range or are you buying it? Or BB for both. Or B, let's do BS. BS, I like that. BS means both. You're buying and selling. We'll give you 15 seconds. So as your primary mode of entry, in other words, how are you getting into this range? Are you buying support as your primary entry, taking profits at the top of the range? Or are you shorting the market here, selling, and then covering your short at the bottom? So you're covering down here. So you're a seller. Or are you trading both sides of the market? You're buying support, you're flipping and getting short. You're buying, covering, buying, getting long. Flip, 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 flip 4 times. BB, BS for both. B for buying, you're a buyer of the range. S, you're a shorty. You're shorting the top and covering the bottom. 8 seconds remaining on the clock for your trade calls. How are you trading this range? Friday morning, if this was you, you're creating you have this chart in front of you. You're trying to decide what to do. How are you going to trade it? By the way, I have to tell you, just as a side note, while you're pondering your answer, that this example that we're showing right here is one of the primary reasons that Object Trader was built in the first place. I don't know if most of you know that. When we were developing the early stages of Object Trader, Gary and I, as we built that tool, it was primarily started off and morphed into what it is now, which is a fantastic cool tool that can do anything. But we originally thought, well, if we could have a tool that could automatically help us trade these ranges, selling the tops, buying the bottom, et cetera, et cetera, et cetera, had a tool that could help us do that with lines and boxes and what have you, wouldn't that be great? And then we started to build Object Trader. And then we realized, wow, look at this could turn into a thing that does almost everything. All right, good. Time's up. All right, now that was partially a trick question. Now there's several ways to look at this. Okay, let me just tell you the different ways you can look at this market. Okay, first of all, of course, the answer is yes. It's very tradable range. Support down here is 73.50. Resistance up at 77. It's a 30-35 tick range. It's very tradable. The swings are fairly close to each other. It's not too choppy. You're going to be fading, getting in and out. Fading means that you have to come 5, 8, almost maybe sometimes 10 ticks off of a bottom to cover or buy. So you're fading. That's what fading means. So when it comes down and it swings, you get in or you cover your short. You're buying. You fade the top up here, getting in and out. You're getting in and out, in and out, in and out, in and out, right? Buying, selling, buying, selling. So the meat of your trade is inside of these 2 lines. You see why we said that it has to be like 20, 25, 30 ticks plus? Because once you fade the top and the bottom, whatever is left in here is the actual trade itself. You can see here that if it's tighter than that, then there's just no trade. There's just no trade there. Technically, you're coming off of a downtrend. So I see most of you wanted to sell the tops because you were coming, here was the trend was down. So this is a continuation of more or less what was a downtrend. Selling is good. Those of you who are buying with tight stop, that's okay. And I see many, many of you said I would do both. So technically speaking, all 3 answers were good answers. Bill asking, let's see, could you trade the Band-Aid at the open and would you be long or short? Let's see, where would the Band-Aid have been here? That's a good question, Bill. Let me answer that question, then we'll wrap. We're really running out of time here. Let's see, the 31 Band-Aid would be right in here. I'm guessing. Well, either here or it's hard to say. I don't know. Might have been right in here. No? I don't know. Maybe it was up here. 31, 32 Band-Aids, more or less in here somewhere. All right, this is one exception in regards to the Band-Aid, and that's a good question, Bill. I'm glad you brought that up. Band-Aids, for those of you that are completely new, are simply we have a selected point in time, whether it be 631, 632, 701, 702, tends to be around market opens, high energy times where we expect increased volatility, news events around 7 a.m. Pacific. We have a band, we call it a Band-Aid, and it's simply a highlighted area of where the market is located at that particular point in time. Generally speaking, when you expect high volatility, though you might, unless you're in a very powerful trend already. Say if the trend was up, or let's do an example. Let's say the trend was down. You knew the trend was down, and a Band-Aid paints right here, as an example, hypothetically. We all see, obviously, you would only short. You wouldn't take longs, right? Because there is a risk that you get a little spike up, you get faked in long, you stop out, and then you miss the nice trade. Excuse me, right? In the case, the overriding case I would submit to you, when a Band-Aid paints in the middle of a range, this would be the exception right here. Because going into 631, we already knew we were in a range, yes? Does everybody see that? You see what we're saying here? If you know you're in a range and you're already trading the range going into any time where a Band-Aid is going to paint around the mid-band, should you take the mid-band trade? No, most times not. Because you could get whipped around in and out of that Band-Aid. And we all know that support is right here and resistance is right here. So you're really looking to still trade the range, notwithstanding wherever a Band-Aid would paint. Okay, Bill, you see that? Everybody sees that? Let me advance the chart again so we're clear on that. This is the one exception to the Band-Aid rule. If it paints in the middle of a range, because you're already trading that range. Okay? All right, that's a wrap. Thanks for coming.